Hello, welcome to the new video. In the previous video, we have seen the intrinsic value and the extrinsic value of the options. In this video, we will see why we sell options. So let's get started. So first, we'll see futures versus options. So both are equity derivatives. So first, we will see the risk factor in both of them. The risk in futures is higher. Risk is higher and the risk in options is comparatively lower. Comparatively lower means once if we compare with futures, it has lower risk. Okay, because in futures we use over leverage. It is highly leveraged product. So therefore, if market goes against our direction with high leverage, then we can take a big loss. So therefore, it has higher risk. Operating cost. Operating cost is also higher in futures. Operating cost consists of stamp duty, which varies according to the state, and it also consists of securities transaction tax, STT. So if one has huge capital and trades with many lots, huge lots, then here the charges will be higher, operating cost will be higher, whereas in options it will be lower. Means comparatively, compared with options, the cost will be lower. So if you want to scale up your capital in the near future and you want to trade with many lots, then options is the way to go. So next is nature. Nature of futures is linear. Price of future depends only on the price of the underlying. Like if I take Nifty index, then price of Nifty future depends on the price of the Nifty index. Whereas in options, it is non-linear. Price of option depends on the price of the underlying. At the same time, it also depends on the time to expiry. It also depends on the volatility in the market. So there are many other factors which affect the price of option. So therefore, options is a non-linear product. So now we'll see what should we do. Should we do futures? Should we do options? See, risk comparatively lower. So options win. Operating cost also lower. So options win. And nature is non-linear. So here this seems favorable, but if we understand the factors like the time decay, the volatility, means how time value affects the price of premium, how volatility affects the price of premium, if we have this knowledge, then we can use those factors to our advantage, and hence here also we can say that options win. So therefore, I personally prefer options over futures, and I would recommend the same to you. This does not mean that I am against futures. No, futures is a highly leveraged product. So it can give you very high returns, but at the same time, it has higher risk. So that's why I would not suggest futures to you in the beginning only. And to hedge futures, so it has high risk. So one can say that we can hedge that high risk with by hedging. We can hedge that risk. Okay, we can hedge futures, but for that also options are required. We can hedge futures by options. Therefore, here also options knowledge is required. So therefore, I tell you to have the proper knowledge of options and its various terminologies so that you can become a profitable trader. Next part. So now we know we have to trade in options. So why options setting only? Why not buying? So that we will see. See, Stock market is a game of probability. No one is 100% sure. Even the most successful trader is not 100% sure in any given trade. So there is a probability of winning. And in option selling, we have higher probability. We will see it. Suppose I am bullish. I think that the market will go up. Okay. So three things can happen. Either the market can go up, it can go down, or it can go sideways. So I am of the view that market will go up. If market goes up, I will make profit. If market goes down, I will make loss. And if market remains sideways, then also I will make profit in option selling. I am talking about option selling. So out of three cases, in two cases I am in profit. So that's the hedge. That's the edge I have in option selling. That's the edge you can also have in option selling. That's why option selling is preferable over option buying. So 3 out of 2 times I have the probability to win. So my winning percentage is 66.6%. So this is my probability of winning. I will write here 66%. And the probability of winning in option buying will be 1 out of 3 times, that is 33%. So this is the main reason why big players or smart money, they do option selling and not buying. That's why you should also do option selling. This we have seen. So we have an inherent edge in option selling, and it's always good to have an edge. Here we don't need any knowledge. Without any knowledge, we have 66% chances of winning. And if we have proper knowledge, then this probability increases to 70, 72, 75%. And from here only, we can earn consistent monthly income from option selling. And options have expiry, like monthly expiry or weekly expiry, and 80% of the options expire worthless. 80% of the options expire worthless. This means that the premium which they have in the beginning or before expiry, it melts down and becomes to zero. So option sellers, what they do is that they sell such options which they think that will expire out of the money, and they eat that premium or they take that premium. In this way, they earn consistent monthly income. So time is your friend when you sell options, because with time, as time to expiry comes near, closer, the value of the premium of option, it reduces. So that is an inherent advantage for option seller. That's why we should sell options. No fear. When we sell options, our position size is done automatically, because to sell one lot of Nifty index, you need 80,000 rupees, and to sell one lot of Bank Nifty, you need around 65,000 rupees. So huge capital is required to sell one lot. So automatically your position size will be taken care of. So in this way, we will automatically do money management, position sizing, and our fear will come down, and that is very good. That is one more advantage of option selling. So theory says that in option selling we have limited profit and unlimited loss. Okay, it is theoretically true, but in reality what happens is we have limited profit. Okay, we agree, but the loss which is unlimited, theoretically it can be limited. It can be limited by hedging, by proper hedging, or by putting stop loss. So in this way we can limit that loss and use this to our advantage. Okay, and next factor is no greed. If I sell an option at suppose 5 rupees, I know maximum I can get is 5 rupees. So I will not have much greed. So greed also is removed. Fear is removed, greed is removed. So the two most important emotions which come as an obstacle in trading are removed in option selling. That's why option seller is in profit in a long term, because he has an inherent edge, and that is what matters. You should always have an edge over others, and option selling gives you that edge. So this does not mean I support option selling, but this does not mean that every option seller makes money. No. If you sell naked options, you will lose money. So I'm not telling you to sell naked options. Naked options means you are just selling options. You are not hedging. You are not putting stop loss. You are not hedging your options, your position. So in that way, you will lose your capital. So I don't suggest you that. If you are selling option, then you should either hedge it or put a stop loss. So never sell a naked option. Never sell a naked option and never buy a naked option. Don't do anything naked. Always do hedging or use stop loss. So these are the various reasons why we should sell option and why you should trade options. So in the next video, so we'll just revise what we have seen in this video. We have seen the difference between futures and options and why options is more suitable to us or more favorable to us. And then we have seen why option selling, why we sell options. Because probability of winning is with us. We have an inherent edge. 80% of the options expire worthless. Time is our friend. We have no fear. We have no greed in option selling. But you should never sell naked options. So in the next video, we will see why we should not buy options. Okay. So write down your learnings from this video in the comment box below, and let's move on to the next video.